Hi everyone, Mike Riley here with Gaining Altitude Financial, and this is a really interesting strategy that was inspired by a conversation I had with a client last week about using your child's critical illness insurance policy as a means of funding a first home deposit for them when they get older. One of the resistances that people always have about insurance is thinking of it only as an expense rather than a risk management tool. But with the return of premium option on critical illness, that insurance actually becomes an asset and you can help your kids move forward. So I've got some fairly simple math for this. Please forgive me for the rounding. The details behind it are a little bit more complicated, but try to keep the math simple. I've taken some liberties with rounding. So the scenario is we have a 3-year-old girl that parents want to get a $75,000 critical illness insurance policy for her with a full return of premium when she turns 25 if she hasn't had a claim. Now, the purpose of this is insurance, so at any point along here, if she gets leukemia, a brain injury, there's 23 different conditions, heart problems, etc., the parents will get $75,000 that they can then use to offset expenses and income and help them through her recovery. That will cost about $60 a month as a premium from the time that she's 3 until the time that she's 25. And she can carry it on in adulthood if she wanted. But if she doesn't get sick at age 25, there's going to be a refund of about $15,300 of premiums. The parents will get that back and they can do whatever they want with it. Now, in this scenario, the parents are thinking, well, maybe we will help her buy a house because, of course, things are going to be more expensive. I know it's already difficult for children to, young people to break into the housing market anywhere in Canada. So the federal government has just put out a new program called the First Home Savings Account, or FHSA. It's brand new. It's only been around for a couple of months. Some of the rules are still, I think they're still trying to figure things out, but the basics are, at 18, you can open this. You can put in up to $8,000 a year. You get a tax deduction for having contributed that money, and it can grow inside tax-free, and there's no tax when you take it out to use it as a deposit on your first home. The trick with the First Home Savings Account, as we understand it right now, is that you can accumulate $8,000 of contribution room every year that it's open, up to $40,000, but that clock only starts when you open it. So delaying opening your First Home Savings Account just puts off when you can top that up. So down the road, our young lady turns 18 and she opens up a First Home Savings Account, putting in $25 a month. Anybody can put in $25 a month. It's a good way to start to build that savings muscle. Each year, putting in $25,000 a month, she's going to start to accumulate some growth inside that. I'm assuming a 6% rate of return. And at the end, by the time she's 25, that has grown to just over $3,000. Now, can she put in more? Absolutely. Would I encourage her to, if you're putting in $25 a month, make it 30, make it 50, put in extra money as you're starting to increase that? Absolutely. This number could be larger. At the same time, those $8,000 increments are growing, so by the time she is 22, she has earned her full lifetime contribution of $40,000. I suspect that cap is going to increase over time in much the same way that it did with the tax-free savings account after it was first introduced. So here's where the critical illness plays a role. At age 25, when the policy matures and the parents get the refund, the full return of premium, they just give that to her to add to her $3,000. And now, inside the First Home Savings Account, there is $18,300. So they've used the money that they have been putting into the critical illness to make a large deposit into this. And I imagine that'll probably be larger anyway because savings encourages more savings. So is it enough to buy a first home? Of course not. There are other strategies that we can use, but I really liked where this conversation went because we said, instead of thinking of this as an expense, but something that's valuable if a child becomes sick when they're young. We turn it into a method of being able to help give a hand up to your kid to get into the housing market. So really thankful to this client for this inspiration on this strategy. If you like this, please let me know. I'd be happy to run some numbers to see how it would work for you. And always excited to share new things. Please ask questions, and always great to have some ideas. Thanks everyone for watching. Please subscribe and come back again to see more gaining altitude videos.